A small amount of initial money invested into high quality different stocks or ETFs, let's say $10,000 for example, is not necessarily a small amount of money later on. Now this is because over time investments, especially dividend paying investments, when reinvested over the years can turn a small portfolio into a massive one if an investor is willing to stay the path. Now in this video I'm going to show you exactly what just a $10,000 portfolio could potentially turn into later on down the line if an investor stays invested long enough. So if you want to see exactly the math behind a tiny portfolio and see how it turns into a massive one effortlessly later on in the future, make sure to drop a like down below, stick around, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now before we go over the dividend growth ETF that we're going to be using for this video's example, along with showing you the exact math behind a $10,000 portfolio and show you exactly how large it could become later on in the future, when it comes to investing, there's really only a few main inputs that an investor can use to build a portfolio massive long term. Now on one hand, an input could definitely be if you are someone that has a ton of cash balance right away off top to invest into different dividend paying stocks or ETFs, for example. And to be completely transparent, that was more or less me personally. When I first started dividend growth investing around 6 or 7 years ago, I was coming off the back of a business liquidity event where I had multiple hundreds of thousands of dollars to invest into whatever I wanted to. And instead of wasting the money buying real estate, which side note, I did waste some of the money and I also did buy some real estate, but my other goal was to take a large portion of the money and build a long-term dividend growth portfolio, which is right here what you've been staring at for the last few minutes. Now, because I was able to spend a decent amount of money right when I started dividend growth investing, that allowed me, of course, to buy a ton of shares of different stocks or ETFs pretty much right off the bat, which paid me dividends monthly and quarterly and allowed me to reinvest those dividends and grow the portfolio rather quickly. Now, I totally understand that a lot of investors don't have that opportunity and are starting with, say, $1,000, $5,000, or maybe $10,000 from the start. But what's great about investing is that the only input to build a massive portfolio is not necessarily if an investor has a ton of money to start out with. You see, in the case for dividend growth investors, I seem to think that if an investor is also young enough and or has enough years in front of them, which they're willing to invest long term, they can turn a small portfolio into a massive one without a lot of money in the start. So generally speaking, an investor is either going to need one of the two things. They're going to need a lot of time ahead of them, or they're going to need a decent amount of money to start off with. And of course, if you have both of them, that's going to be great, but you don't need both. You really need one or the other. Now, the example that we're going to go through in this video, I'm going to show you the exact math behind how a $10,000 portfolio will turn into a $1 million plus portfolio later on. And stay tuned because these numbers are going to shock you. A dividend growth investor could really invest in any high quality dividend growth ETF that has a history of growing long term, but on top of that, a history of paying dividends and paying more and more in dividends over time. Like this ETF, for example, DGRO, the iShares Dividend Growth ETF. This ETF back around 10 years ago was paying around 16 cents per share per quarter. Now, 10 years later, around 37 cents per share per quarter, which is extensive dividend growth and going to help especially a small portfolio grow to a massive size later on in the future. But it's not just DGRO, there's other high quality dividend growth ETFs out there like DGRW, other ETFs like VIG, one of my other favorites, the Vanguard Dividend Appreciation ETF. There's of course a tried and true VOO, the Vanguard S&P 500 ETF, and my all-time favorite, just because I would consider myself a dividend growth investor that likes cash flow a little bit more than maybe the average, and the fact that generally speaking, out of the other popular dividend growth ETFs, SCHD has the biggest starting dividend yield. Now, just out of the last, say, 5 or so dividend growth ETFs that we talked about in this video, I'm not saying that those are the only ones that you can use to build a massive portfolio long term. It's really going to have a lot to do with your strategy, what you're looking for. If you're more concerned about dividends along the way and want to reinvest them into more shares of whatever it might be, or maybe you're an investor that's more concerned about growth long term. Like I said, for me specifically, I'm investing heavily in this ETF, the Schwab US Dividend Equity ETF, because I want to see my portfolio grow long term, but I also want significant cash flow basically from day one, which SCHD offering a 3.5% trailing 12-month dividend yield is not bad whatsoever in my opinion. But now here's the fun part. Heading over to the dividend calculator, we're typing in a $10,000 initial starting principal. So again, if you start with more money, it's most likely going to help you, of course, grow the portfolio and compound it faster. But of course, you don't need to have millions upon millions of dollars to start with. A $10,000 principal, a $6,000 annual contribution on top of that. So that's an investor adding another $125 per week into more shares of SCHD. Of course, it goes without saying, if an investor adds more frequently, if an investor generally spends more money and buys high quality dividend growth ETFs more frequently, let's be real here, they probably have a better chance of growing their portfolio faster. But just $500 or so per month is pretty doable for most investors. So that's what we're going to have here for this example. Next, we're going to use SCHD for this example, so a 3.5, 3.4, around that initial annual dividend yield. And side note, if you are able to grab some of these high quality dividend growth ETFs when they're on sale, your initial starting dividend yield is of course going to be higher, which is going to help the portfolio grow even faster and compound even quicker. An 8.7% expected annual dividend amount increase. SCHD has raised their dividend certain years, say 5%, 10%, 12%. But just a minute ago, I looked at a stat and it says on average the last, I think it was 5 or 10 years, 8.8%. So I went with 8.7 for this example. Again, take all these numbers with a grain of salt. Expected annual share price appreciation per year, 3%. Years invested is 30. So remember earlier I said that an investor needs, again, generally speaking, a lot of money to start off with or a lot of time ahead of them in order to see a portfolio grow significantly. Now, that's not saying that an investor can't grow a portfolio massively in 5 or 10 years. I'm just saying generally speaking. So 30 years invested, $10,000 to start off with the stats of that of SCHD, let's see what we get. So the initial portfolio is going to be worth the $10,000 that the investor started with, and this portfolio is going to pay an investor year one, $350 a year in dividends. But with that annual contribution of $6,000, along with those dividends reinvested, already by year number 2, this portfolio is going to be up to $16.6 thousand and $621 per year in dividends. Now, we touched on dividend growth and why I think that's a very important metric as far as finding different stocks or ETFs to invest into long term, because generally speaking, a nice solid dividend growth rate is going to basically pay you more and more year after year, which I think for the most part every investor would love. And as you can see, the yield is going to go up and up and up as the years go on, because of course SCHD, for example, at least historically, has paid more and more in dividends year after year. So scrolling down a little bit, 10 years in, this portfolio would be up to $90,000 if an investor just started with $10,000 and followed the path that we talked about. By year number 11, this portfolio would already be over 6 figures, $103,000, which is definitely significant, not necessarily enough to retire off of. The dividends are only $6,000 a year. So again, you're not really going to quit your job. It's not going to outpace your career at this point, but it is getting somewhere. By 15 years in, let's say a 25-year-old started this portfolio. By this point, that investor would be 40 years old and they would already have a portfolio of around $170,000, earning around $13,100 per year in dividends. But the cool thing is that after year number 20 on, I would say that's when the numbers start to get really big, because the power of compounding kicks in and the numbers compounding off each other are just starting to get very, very juicy. Year number 20, $317,000 with $32,000 per year in dividends. Year number 25, $613,000. $82,000 per year in dividends. Now we are getting somewhere. Now at this point, theoretically speaking, this could probably pay for your retirement, if not more, but again, everyone's situation is different. Now, just to cut to the chase all the way to the bottom, we're talking 30 years later, this portfolio, after the dividends reinvested value, would be $1.516 million and earning around $230,000 per year in dividends. Now, before you say it, well, we don't know what's going to happen with SCHD's dividends in the future. We don't know what's going to happen with the growth ETF. All those things, of course, are certain. Just because stocks or ETFs have went up in the past does not necessarily mean they're going to keep doing that forever. I totally understand that. But just going off of the numbers that we used, this portfolio in theory would have an ending balance after 30 years of $1.5 million, which is a $10,000 starting principal, and $500 added to it per month. So it just goes to show that an investor that has a decent amount of time ahead of them and just stays invested, stays the course for a long time, even if they don't have, say, $50,000, $100,000, a $10,000 initial principal with a small amount of money added every single year could still turn a small portfolio, which, I mean, I don't consider $10,000 a tiny portfolio, but I would say it's a small portfolio, relatively speaking, into a massive, massive portfolio later on. But now that we went through all that, I want to hear from you guys down below. Which stock or ETF are you buying consistently as of right now to build out your long-term portfolio? The portfolio that you're going to use for retirement later on down the line. Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.